CFTC also, I think the same time that.
Yes, I had the pleasure of being a commissioner when Heath was our 14th chairman. I started off at the CFTC in 2017 under the prior chairman, Chris Giancarlo. I had been nominated originally in 2016 and was renominated in 2017. So I had a long confirmation process, but I had an even longer path to that nomination. And during that entire time period, I wasn't really thinking about crypto. I was thinking about Dodd-Frank and how the rules had been written in response to the global financial crisis, and ensuring that if I had the chance, I could help to recalibrate those rules from what I saw was a draconian approach to the financial markets through an overreaching piece of legislation. But 3 months after I joined the CFTC as a commissioner, one of the exchanges over which the CFTC had authority certified a Bitcoin futures contract. And I think there are two kind of things there. The first is that the CFTC has a wonderful process in statute that is very pro-innovation, that reverses the burden of approving new products. So instead of putting the regulator in the position of approving something, it puts the regulator in the position of having to object to something that an exchange has already said meets the requirements of the Act. And that's an important thing. In my view, innovation and regulators don't go very well together. And the proof of that outcome is actually in the marketplace and how many new and innovative products were listed in the derivatives markets since that authority came in line. And Bitcoin futures was a part of that process. And I think that's an important thing because I'm not sure that our agency, as it was constructed, or any agency, would have felt like they had the political protection or were risk-taking enough to do that. But we found ourselves in the position of approving the first crypto derivative listed in a regulated environment in the world, and it thrust the agency in the middle of the governmental debate on crypto and into the crypto ecosystem itself. And I was proud to lead, I think, a number of conversations with external policymakers and industry experts at the CFTC through my time there, exploring issues of cryptocurrency, including consensus mechanisms, stable coins, and other innovations.
Thank you. Yeah, I hear a lot of times, it's unregulated market, Wild West and all that, but for those outside the United States, it's kind of two primary regulators, the SEC and the CFTC, regulating digital assets, but also the banking regulators and Federal Reserve, and multiple regulators, banking regulators. But Brian, you and I have been up here before. We were in London a few months ago with the Parliamentary Forum. That was great, and you have a good way of explaining sort of what is this stuff we're looking at? What are digital assets, cryptocurrency, whatever you want to call it? And there's different things. I know, today I think there's some 23,000 cryptocurrencies, starting with Bitcoin and others, but that's quite a lot.
Yeah, well, so let me maybe just start by what I think this innovation means, as opposed to what it is or how it operates. I think everyone should be able to have access to plenty of educational materials to figure out the mechanics of it. But as I kind of look at the innovation of crypto, tokens, digital assets, pick your own monitor, the thing that Bitcoin did was it created the ability to have a unique digital item, right? In the past, anything that was digital could be copied infinitely and traded without the ability to know whether or not it had been double spent. So the creation of the Bitcoin blockchain and the Bitcoin consensus mechanism allowed something to be digitally unique. That in and of itself was very powerful. And then it also allowed that digital unique item to be transferred from individual to individual in a trustless fashion. So you did not need a trusted intermediary to transfer that value or that product. That created the ability for that process and that token or representation to have value, right? And I don't know what that value is. I don't know if it's small, I don't know if it's large, but there's a marketplace for it, and the market's going to decide what that value is. The Ethereum blockchain comes along and it adds composability to that. So instead of just Bitcoin representing something that is scarce, now you have a blockchain upon which anyone can build. They can build new products all of which can be decentralized, meaning no one can kick someone else off, no one can reverse transactions, and the code is public and immutable and open source, right? And so the way I think about that is that, Bitcoin is like holding a dollar bill, and the Ethereum blockchain is like holding an iPhone, right? One is a world computer, and the other is, the trust that you have in it to be able to redeem it for something. The way we think about that innovation at A16Z, at Andreessen Horowitz, is that it's going to create the next evolution of the internet, right? When the internet started, we can call it Web 1. Web 1 was an open source internet. It was an internet of protocols, of open source protocols, HTTP, SMTP, right? Anyone could build on it, and you knew that if you built something on it, you owned it. But it was a read-only internet. You took things from the physical world, you put them online, you engaged with them on a one-on-one basis. Web 2 comes along, and it's an internet of networks, right? It's a read-write internet. It's an internet of community, of engagement, of content. But it becomes a closed internet, dominated by 3, 4, 5 tech companies that control all of the intellectual property and all the value associated with it. We think Web 3 is going to return to the open source nature of Web 1 through public transparent blockchains, but through tokenization, allow the internet to become a read, write, own internet, where individuals can own the value of their intellectual property, own their digital identity, and own the value of their contribution to networks. I think the key is to focus on, when I said before about the progress from Bitcoin to Ethereum and to other blockchains that are decentralized, that decentralized concept is very important. And we can, everyone can have different metrics around when decentralization is achieved, but the fundamental principles, are fairly rigid, which is the inability to reverse transactions, the inability to kick people off, right, or permission access, and the immutability and open source public transparency of the underlying code. And that's important because that's what's going to drive, we think, that internet of value where contributors, individuals can own what they are delivering to networks. And you can see that in social media. I was just pulling up an app on my phone called Warpcast. Warpcast is now live. It's built on the Farcaster protocol, where your handle and all of your posts are stored directly on a blockchain. And Warpcast is one app out of many that can pull from that and present it in an interface that looks exactly like Twitter or X. And if you don't like the rules of Warpcast, you can go to a different app, and all of your posts will be there under your same handle, which gives you the ability to own your content and own your network. We can think about this in 5G network provision. There are huge capital costs to creating 5G infrastructure. There are zoning requirements. But through individual self-custodied wallets and a tokenized blockchain, we can now allow individuals to deploy a $2,000 device in their home that creates about a mile radius zone of 5G network provision that as large telecom firms offload their excess data, offload their excess 5G data onto that what's called a helium network, the individual that owns that device receives mobile tokens for that use. And that way you can distribute and disintermediate the need to have very large centralized 5G network providers. Xi already talked about music, right? The ability for musicians to sell directly to their fan base without an intermediary. There are over 15 million artists on Spotify. Only 40,000 of them, no, only 15,000 of them make over $40,000 or more, right? The average the take rate on Spotify is somewhere between 80 and 90%. And in the traditional music space, it's not a whole lot different. I think you have to stream a song 3 million times to make $1,000, whereas there are a number of smaller artists that are getting started that have a dedicated fan base that are willing to pay $100 or more for NFT number one of a song, right? Now you create a tighter knit community of that artist's fan base. You reward the artist more directly for their content, and you disintermediate rent seekers. So we think the application of the technology is profound, and we think it can apply to all sectors of the economy. And these are live use cases. So I think I would personally retitle the panel "The Future of Value," even though I think the future of money is an incredibly important part of it.
Brian, any thoughts on this?
I mean, just to, first of all, I'd like to echo Heath's comments that I think it is a wonderful thing that central banks around the world are thinking about how to advance themselves technologically. I think we need to give everyone credit for that. But I do think we all need to recognize that none of us are going to out-China China. And taking that kind of approach or thinking that our government will be able to solve those issues or avoid the pitfalls of those issues, those are very significant policy discussions. They're going to take a long time to try to resolve. And even if there is some agreement on them, there is no guarantee that that is how they stay. I'm very worried about central bank digital currencies, not just if they can get it right the first time, but whether or not it can stay that way consistently. I think the reason that the West and the United States have the economies they do are because of entrepreneurs and innovation. And I think public, transparent, open source code upon which innovators can build, value can be transferred, trusted intermediaries like Circle and others can provide services. I think that's how we counteract the CBDC China threat.
I think that raises an interesting issue or question that, I've heard this before where we can't out-China China, as you say, a very important point, but should we be more concerned or accelerate our own CBDC program? Because China may be out ahead of everybody else and they're going to do it first. And is it a national security issue where not only they have their digital payment system centralized, but they're requiring other states and companies that do business with China to use that, and could replace the U.S. dollar or other currencies as kind of the main way of doing business. And so is that an issue, or is that even a reason for us to do anything differently?
You want to just speak loudly and we can, yeah.
I'm from Georgia, member of Parliament. So what would be your recommendation to smaller countries like Georgia is? We're speaking about China, Russia, US.
Yep.
So how to adapt these technologies, how to attract more, let's say, driven companies, how to use blockchain crypto technologies to the country, and how to benefit from this new, let's say, world which is creating now around us.
Does everybody hear that? So from gentleman from Georgia, I love Atlanta, by the way. No, different Georgia. And how should smaller countries be looking at stablecoin, cryptocurrency by way of regulation or benefits? You want to take that, Brian?
Well, from the venture capital side, let me tell you about some of the reasons why we chose the UK and how I think you can think about, Georgia in that context and where, you can decide what progress, they may need to make. I think as we're looking at a jurisdiction to try to locate or source for investment, first of all, I think at this point ideas are global, right? I think we have access to global ideas. We have access to, the best founders in the world. And if, the smartest people that are trying to form companies with great ideas, I think I have a strong belief that they will get funded. But I think as we're looking at jurisdictions broadly, we're trying to look for three things. Number one is a deep pool of talent. which, is usually exemplified by world-class universities and very technical expertise, in software and programming, et cetera. Number two is a regulatory environment that's conducive to entrepreneurialism and especially to innovation in this space. So, the appropriate kind of rules that don't enshrine centralization like I talked about around disclosure obligations, that force things into legacy systems that don't work, right? So a right-sized regulatory structure. And then the third is kind of a culture of entrepreneurialism, where the best and the brightest want to go start a company, right? They want to take a risk. They want to go work for a startup. They don't necessarily think that the end-all be-all is to go work for the government or the biggest established firm, in their jurisdiction, so that there's kind of a culture of risk-taking, entrepreneurialism, and innovation. And so those are kind of our three key metrics, and judge them, as you see fit for your own jurisdiction. But if you know of good founders, send them our way. Let me maybe react quickly if I can. On your first point around decentralization, consensus mechanisms and staking specifically, obviously decentralization and the metrics to achieve it are dependent upon how decentralized the ownership is. So if the ownership is centralized, then decentralization does not apply. However, if you were going to try to do that with something like the Ethereum blockchain, it would cost you tens of billions of dollars, and you would therefore lose all of that money because you would eliminate the value of that blockchain in doing so. Very costly endeavor. Someone may decide that that's worth their time. But then I think you also have a lot of game theory that applies to those kinds of activities as well. And on your last point around holding somebody accountable, centralized concepts, I would point out that the Linux operating system is decentralized. It's open source, and it runs 85% of the world's smartphones, which has reduced the price of cell phones around the world to something like $10, and more people have cell phones, smartphones, than have access to running water. And I don't know that anyone is worried about going after someone associated with Linux if there's a problem with their smartphone.
Great observation. I will say that we have another crypto panel tomorrow morning. I would recommend you come to that crypto supervision and regulations. That'll be interesting too. But thank you very much for your time and interest today, and our panelists. Thank you. Great observations. We have another exciting panel coming on cybersecurity. Is that right?
Yes, sir.
Okay.
Very well.
Thank you.
Thank you all. Great panel.